Hey everybody, Marty Mazur, good afternoon, 5th of April 2016. I will keep this one kind of quick. And then I'm also going to include below it the one I did over the weekend. If you didn't get to see that one, I go into more detail as to why I've been a little bit skeptical about this market on the very short term. And I don't want to take that long today to go through all those again. So if you missed the weekend one, I think that one's fairly instructive actually. But let me talk about today. The market finally delivered a decent down day. The Dow was down about 0.75%, which was 133 points. Nasdaq and the S&P were both down about 1%. Oil actually rallied at the end of the day. There was the rumor of an explosion in Iraq that seemed to spike the price early in the day, but that didn't hold. And then right towards the end, apparently someone in Kuwait offered an opinion that a freeze of production can indeed happen with or without Iran's cooperation. And that helped the price a little bit. And I noticed in after hours it's up about 2%. So there was an inventory report that actually showed a draw of inventories after the market closed. And tomorrow we get the EIA number, which is the more closely watched number. So it'll be interesting to see. The technicals in oil are breaking down a little bit. We still have the whole supply-demand issue. If indeed there is an official freeze of production that encompasses a great deal of world production, well, then that probably could be pretty bullish for the price. So we'll wait and see. Stocks and oil don't seem to be nearly as perfectly correlated as they have been. I have told you though that I think if oil breaks down a bunch, we could see stocks follow it lower. So we'll see how that goes. I don't think today's sell-off in stocks had anything to do with last week's sell-off in oil. Also today, the IMF chairperson Christine Lagarde issued a pretty stern warning again about global growth going forward. She talks about serious headwinds. She talks about need of fiscal reform pretty much across most nations, particularly emerging nations. In my view, she's actually continuing to subtly or otherwise try to influence the Fed to maintain a very dovish posture going forward. So we'll see how that turns out. Tomorrow we get the minutes from last month's Fed meeting as well. The economic data has been pretty mixed, and that's pretty much throughout the world. Eurozone, purchasing managers indices, well, the headline says they were disappointing. Looking at them, they weren't all that bad in my view. Spain's was actually very good. France is in contraction mode. The rest of them are above 50. They just didn't quite come in, with the exception of Spain. It didn't come in as good as economists had expected. Factory orders yesterday, they disappointed here in the U.S., and in my view, the most disappointing thing was CapEx orders. Folks, we really need to see businesses begin to invest. There have been some real political and regulatory headwinds, I think, are the biggest issue. But I think what's going to be instrumental to the longevity of this current expansion and bull market is businesses to invest in becoming more productive. So we're going to look for more signs of that. I saw some signs in recent trade numbers that were encouraging, and so it's pretty noisy statistics along those lines. But we really need to see improvement, so I'm going to be looking for that. Trade deficit widened, although it widened for good reasons. We had both an increase in demand for our exports. So exports were up and imports were up even a little more. So cross-border transactions were up in both directions. That's a good thing. The trade deficit unequivocally, as I've illustrated numerous times over the years, does not bother me, not in the remotest least, if I can say it that way. If any of you disagree with me and you'd like some dialogue, shoot me an email or give me a call, because I think it's an important issue, and I think we are being firmly abused by political rhetoric these days. There was also a Treasury ruling on tax inversions. That's a U.S. country finding a tax domicile outside of what is the highest corporate tax rate in the developed world, essentially killing, at least that's the way it appears, a deal between Pfizer and Allergan. And so maybe that had some influence on the market today as well. So I can go on and on, folks. S&P is trading at 17 times earnings, so it's back up there. It's at those rich levels that I talked about at the beginning of the year, although in a very low interest rate environment. I'm okay with that. Financials got hit hard today. Financials are very cheap on a price to earnings basis. If you look across sectors, which I do a lot, you got financials, you have transports, telecom, home builders. They all look relatively cheap relative to the rest of the market. Staples are getting a little stressed. Utilities got creamed today, and they look expensive to me. So there's pockets of strength, there's pockets or pockets of value, maybe pockets of stretched valuations. But all in all, I don't think you lose any sleep with valuations, as they said today in the U.S. market. You look at the Europe, Australian, Far East index at 14 times earnings, emerging markets at 12. If you break it down to the Eurozone at 13, Japan at 12, China at 10, India at 15, Brazil at 13. I'm just reading from my notes. You have the rest of the world looks cheaper to me, and I'm more constructive, quite frankly, on non-U.S. stocks, although volatility is going to be very intense going forward. Again, the technicals have been suspect, and that's what I've been talking about, and that's what I talk about in the other video. And again, this one wasn't going to be this long, but I'll keep going and wrap up. So the chart is my 60-minute chart. I talk about these upward sloping wedge patterns. We tend to break out below. That happened today. 2045 has been an important level for the market, and if you just kind of go back, you can see where it was support. It was very much a support level for the market once it got above there. And so here we are. We bumped right up against it 3 times today. Came down, looked like we were going to close below, and then close right on top of it. So I promise you, technicians are looking very closely at that. If we break down below that in the next few days, everybody's going to be talking about 2020, which I could pull you back and show a lot of support and resistance there. And then we're at that 62% retracement level, which is huge at 2010. So it'll be interesting to see if we gain any momentum to the downside, or if this is a buying opportunity. There's a lot of shorts in the market, a lot of cash on the sidelines. This could easily get bought anywhere in here, and it could get bought first thing tomorrow morning and get pushed higher. So I'm not ridiculously bearish on stocks. I do have a bearish bias in the very near term. So it'll be interesting to see as we stretch out here the next few weeks where this market goes. And then let me just, let's take a peek at the 1-year chart. And you can see we had that trend line that we got above on Friday. Unfortunately, could not hold that. Came back down there pretty noticeably today. The S&P was down 21 points, but closed right on that 2045 line, which is an important place to be. The moving averages are still moving in the right direction or beginning to. And then I introduced you some time ago to the MACD, moving average convergence divergence. When the MACD line drops below the signal line, that's a bearish signal. So we did get that sell signal today, and it did get some follow through. So what made today different than many, many days over the last few weeks is that we started down and we ended down. The market movement had been a lot lately. We start down and we end to the upside. We were lower. We were down about 150 points on the Dow at one time, so there was maybe some momentum there at the end. But when the MACD crosses below the signal line and it's up above 0 like it is here, that tends to be something to pay attention to. And again, you would definitely pay attention to it if you wanted to short the market or if you were a short-term trader. But we're not. We're long-term investors, and this is just me giving you some perspective on the short term so you don't get nervous about it and you know what to possibly expect. I'll leave it there, folks. And again, look below for more detail on some of the technicals that may be impacting the market on a near-term basis. Have a good day. Thanks. Bye.